then it's a very fast decision for me that I want to own that company. And great examples for that is Disney and McDonald's and Coca-Cola. So when you look at non-tech stocks in my portfolio, that's usually the logic. I'm trying to figure out as a consumer, do I understand why this company is so successful? And if I realize that I understand why this company is successful, I would usually do a relatively brief, because I'm probably lazier than Warren Buffett. I would usually do a relatively quick brief of that company's financials, multiples, equity to debt ratio, but like 15 to 30 minutes max. Probably would review their recent investor relations presentation, which I think, by the way, it's amazing today how easy it is. Every public company, you just go to their website, we'll put those links on eToro, download the latest presentation, anybody can read it, and people should relatively easily understand what it says there. So that's my belief system. I'm investing in companies who I believe in their products for a long period of time. And that will give you a very large diversification for a small portfolio of whether it's $1,000, $5,000, or $10,000.
What made you go into that route that, hey, I can be both. I can be an investor and I can be an entrepreneur at the same time?
I did my portfolio management course when I was during my army service when I was about 18. So I learned a lot about the stock markets and basically sort of got educated professionally about the markets relatively early on. And actually, for me, this was a big decision when I was about when I was about 21, I really tried to figure out, what do I want to learn as a profession? Is it computer sciences or is it finance and economics? And I decided to go towards computer sciences because I love building things.
It's nice in a way that it allows people like me from Asia to be exposed to companies that we like: Nike, Starbucks, MasterCard, Visa, PayPal, and everything else in between. Because prior to this, I was just exposed to stocks in the Philippines. And I think this democratized everything, and it allowed a lot of people to have access to all of this. Now to the juicy part, and this is what a lot of people want to know. How do you invest? You're a big advocate for cryptocurrencies. Why is that?
I told you before, like the aha moment I had for the first time, I opened a stock on my bank account when I was about 13 or 14. So I call it 3 technological aha moments. One is when I started using the internet, and I still remember the analog modem bleeping. And I remember downloading Simpsons text episodes online from BBS's. And that gave me a feeling that I'm connected to everyone around the world, and that data is an information suddenly became a part of me in my fingertips, right? And the second part was trading stocks for the first time. And I remember trading the stock and then seeing the actual stock traded. I think it was on Yahoo Finance or on the blotter of the exchange. And I'm like, wow, I'm sitting in Israel, clicking a button, and the price of a company I just invested in went up because I bought that company. And that helped me understand how amazing it is that the capital markets are global and operating for everyone from all around the world. And then I built eToro. I actually found out something very disturbing. Financial services are a broken system. Nothing communicates with anyone. When we started in 2000, banks don't have APIs. You trade with banks and then you need to wait for the next day to understand what happened. And you need to reconcile everything and constantly look at your transactions and reconciliation. Like the entire settlement, clearing and banking process is still today very much broken. And I realized that when you're sending money from one country to another, and suddenly that money disappears, and you need to wait for 48 hours to think, where is the money I sent from X to Y, and you don't see it on the GUI, and you try to convert one currency to another, and the costs could be horrendous. So building eToro as a computer scientist, I looked at how the financial system works, and I'm like, wow, it looks like almost there's no computer. Like, people didn't understand how to use computers and software. And I started writing about the fact that there needs to be a transparent money system where everything is connected and everybody can see where the money is. And then when I saw Bitcoin for the first time, that was my third aha moment. I was like, wow, this is how money and digital assets should work. 24/7, always open. All the utilities are public, have APIs into them. There's no one gating the APIs, and it's exchangeable and tradable, and anyone can set up his own self-custody. Now, these three features of Bitcoin and most of the blockchains out there, still today, from financial services point of view, are mind-blowing, because Bitcoin was practically the first digital asset, financial digital asset, that you could own yourself, right? Because when you have money in the bank, you don't have money, you don't really own that. The bank is closed, the branch is closed, their servers are down, you don't have access to the money. You try to move the money, it takes sometimes days, and sometimes they tell you, no, you can't move the money from some reason or another. Where Bitcoin, you actually hold the asset, you self-custody it. And even as a financial services company, it's super important for companies to be able to create that self-custody process, and everything is with APIs, and everything works 24/7. So these three small features are, in my opinion, a revolution that has just begun, and it's going to basically wash the entire financial services industry. I'll be amazed if in 20 years, not every single financial asset in the world has an API, trades 24/7, and you can open, and it's relatively easily to open an account to receive that asset, right? There's regulatory issues, etc., but that's another story. So first of all, I fell in love immediately with the concept of Bitcoin and blockchain. I started paying people with Bitcoin. So I went to Bitcoin Talk in 2011, started writing posts. I had many ideas, and nobody in eToro actually wanted to hear those ideas, because everybody in eToro back then thought Bitcoin is crazy, it doesn't make sense. I had only like 2 people out of the 100 that actually were willing to experiment with me in Bitcoin. So we bought some Bitcoin for eToro at $5 per Bitcoin. And then we started just using Bitcoin to pay programmers on Bitcoin Talk to build stuff. One of them, by the way, was Vitalik Buterin. So he helped us write the Colored Coins protocol, which was how to tokenize assets on top of Bitcoin in 2012. And we actually paid him with Bitcoin for writing that spec sheet for tokenization and assets in 2012. So I'm still rooting and tooting for the entire world of financial services to become tokenized and digitized over the next 10 to 20 years. It's going to be a long process, because it's a big industry. It's $200 trillion of assets that need to move from archaic, broken systems to a new global system, and it's still not clear what that new global system or systems are going to be. So that's when we started trading with Bitcoin, and then we were the first broker to actually enable Bitcoin trading in Europe and enable people to trade cryptocurrencies very early on. And since we were in touch with Vitalik from the days of Colored Coins, we were one of the first platforms to offer people to trade Ethereum. And once we added Bitcoin and Ethereum, we started opening up the gates and added XRP and all the rest of the coins. And we caught up, like we added Ethereum to the platform when it was $6. We added Bitcoin to the platform. I think the lowest it was in the Tor platform is $120. So we saw a lot of these cryptocurrencies really take a significant rally in 2017, 2018, and now 2020.
I believe a lot of people who invested even at the early part of the year for Bitcoin should be very, very happy by now. I'm curious, based on what you said, I got three important questions that I could formulate from that. Is one is I looked at your portfolio in eToro. Primarily, there were a lot of tech stocks and there were a lot of big brands. How do you pick those specific stocks? What's your line of thinking for that?
I'm very much inspired by Warren Buffett in how do I think about the markets. And when I had the dinner with him earlier this year, which was an amazing eye-opening experience for me, it helped me sort of crystallize really what my beliefs are. I invest in companies that I believe in their long-term future. And if sometimes I want to crystallize it even more, but again, there's differences between, but I want to believe in the product that the company is selling, and it's what Warren Buffett calls its moat, right? So why would it be hard for other companies to try and compete with them on that product? And then a lot of times I would ask myself the question, do I see my kids using the products of this company? And do I envision my grandkids using the products of that company? And if the answer is yes, then it's a very fast decision for me that I want to own that company. And great examples for that is Disney and McDonald's and Coca-Cola. So when you look at non-tech stocks in my portfolio, that's usually the logic. I'm trying to figure out as a consumer, do I understand why this company is so successful? And if I realize that I understand why this company is successful, I would usually do a relatively brief, because I'm probably lazier than Warren Buffett. I would usually do a relatively quick brief of the company's financials, multiples, equity to debt ratio, but like 15 to 30 minutes max. Probably would review their recent investor relations presentation, which I think, by the way, it's amazing today how easy it is. Every public company, you just go to their website, we'll put those links on eToro, download the latest presentation, anybody can read it, and people should relatively easily understand what it says there. So that's my belief system. I'm investing in companies who I believe in their products for a long period of time, illustrating the grandchildren. In addition to that, I love disruptive technologies. I have a very long-term view on technology and how the world is going to look like in 10 or 20 years. So one thing is thinking from a consumer point of view. I'm pretty sure all my grandkids are going to have Disney Plus accounts. So if all my oldest child is 10, but if I'm correct, and Disney, Star Wars, Avengers, now as great series, all of my grandchildren are going to have Disney Plus accounts. I'm going to spend, if I'll actually buy them the Disney Plus subscription, right? I'll probably have 15 to 20 grandchildren because I have 4 kids and 1 on the way. That means I'm going to pay, as their grandfather, $200 at least. Now adjusted to inflation, 40 years from today, that's, I don't know, probably $2,000 a month, right? So $2,000 a month for 20 years, because it's a subscription model. So I'm telling myself, hey, I'm going to spend on future inflation adjusted dollars, $500,000 to Disney 40 years from today. So I should probably own some Disney stock. So that's thinking about it from the consumer point of view. Thinking about it from the technology point of view, and again, there's always a question of price and cost, right? So, and tech stocks, disruptive technology stocks right now are very, very expensive. So you always need to sort of also look at the price at PE ratios and do they make sense? But when you think of things like, Amazon or Facebook or Google or Microsoft, because we're a big client of Microsoft, so now I understand better how Microsoft and Salesforce work with companies like ourselves, then I can easily understand their vision and how they're what are going to be their products 10 years from today? How are they thinking about their strategy? And are they actually good at what they're doing, right? And I think all of these companies are just doing an amazing work at what they're doing. In a lot of these companies, we use their products. Zoom is a great product. Airbnb is a great product, right? Shopify is an amazing product. All of these, by the way, right now are a bit too expensive. But these are just companies that you can relatively easily evaluate their long-term strategy and ask yourself, 10 years from today, for example, there will be almost no new cars that are not electric, right? So electric cars is something that's inevitable. By the way, digital money, also digital payments, it's an inevitable future. E-commerce, inevitable future. Everything, all commerce will become e-commerce. All finance will become fintech. And therefore, if you understand everything is becoming digital and based on technology, then if you look at these companies and ask, are they doing the right things to be here 10, 20 years from today? And if they are, it's a relatively simple buy. It's also worth noting I'm extremely diversified. My guys at eToro claim I'm overly diversified. But maybe one of the reasons of that is like I really make decisions easily on buying a small amount of stock, right? So to buy with 1% of my portfolio, to buy something like Airbnb, I don't really care if it's expensive. But if it's buying, 5% of my portfolio, I'd be more sensitive. So a lot of times I would buy sort of small investments. If you can look at my portfolio, it's all public, right? So every one of your listeners can just go and see my portfolio. And you can see that there are a lot of stocks where I own a small percentage of my portfolio. And those are stocks that I basically said, okay, I'm interested in this company. I want to buy, some of their shares to be in my portfolio. And if it falls down, I'll buy more. And if it goes up, I'll also probably buy more.
For sure, there are people who are watching this who probably have $10,000, $5,000, $1,000 that they want to start. For that type of portfolio, do you have like a suggested number of stocks that it's not too risky for them to be that diversified, but in a way, it has enough exposure for them to allow them to feel the benefit if a stock goes up?
I would generally say a good portfolio has to have at least 10 stocks. It probably should not have more than 100, and that's a wide range. But again, choosing those 10 stocks is not necessarily that hard. Most people, and by definition, people who love stock markets are also a lot of times passionate about technology. So they can evaluate the companies and of the products that they use and love. Of course, a big benefit of the eToro platform is you can go into the Google page and ask other people what they think about the price right now, what they think about the company, what they think about the product, so you can talk to other people. And if people feel that they don't have the sufficient expertise or professionalism, they can just look at what other people are doing and automatically copy them. So you can find someone on the Popular Investor Program who's investing in 50 different stocks, and you can see their track record over 3 years and just decide to, with a click of a button, to copy him. And that will give you a very large diversification for a small portfolio of whether it's $1,000, $5,000, or $10,000.
By any chance, did you invite Warren Buffett to be part of the Popular Investor Program when you met him?
No. But we, by the way, we do have a popular investor copy portfolio called Warren Buffett. I don't know if you've seen it.
I was just curious to see if he would join. So Bitcoin, as what we've mentioned on the top of the video, hit an all-time high today, and there's so many theories about Bitcoin that it's already overvalued from where it is right now, and but a lot of people are saying it's way undervalued for where it could possibly be. Where do you stand in the whole realm of Bitcoin is the future, or there will be something else that will replace it?
I don't think there will be something else that is going to replace Bitcoin as the king of cryptocurrencies. I again, this is my personal view. I think that the Bitcoin brand is as big today almost as things like I don't think McDonald's or Coca-Cola, but not very far from them. So I think Bitcoin is probably one of the largest brands in the world. And when you ask somebody, define to me what's the money in the internet or a cryptocurrency, they would probably say Bitcoin. I can pick stocks, I can choose stocks. My portfolio only turned 100% this year, and I'm very, very happy. But in 2018, because of the crypto winter, it went down by 50%. And I didn't mind because I did 600% the year before. So I understand the risks, and I have my own thinking system and method for picking a wide range of stocks. And I've been doing this for, 25 years now.